Buying a home with cash in DC. Should you do it? What's different from a sale with a mortgage? And tips for how you do it the right way. If you're wondering about the best way to buy a home with cash in the DC area, this is the video for you. Welcome to my channel, Julie Grandon Real Estate. I'm Julie Grandon, your DMV area realtor, here to help you get the very most out of your transaction, whether you're buying or selling your home. As always, if there's something I miss or you would just like some more information or just discuss something else real estate, please don't hesitate to reach out, call, text, email, whatever works for you. My contact information is in the description below. Should I buy a house in DC with cash? As of right now, if you're paying with cash, you'd be avoiding some pretty high interest rates. So first off, when you're considering whether or not you should buy a home with cash, you have to keep in mind that not everybody will have the cash available to be able to do that. So that's clearly one big determining factor. So to come up with the cash, you can use your own funds in full, get a gift from friends or family, or take out a personal loan. And a personal loan wouldn't adhere to the mortgage standards and would be based on the house value, etc. It would just be a personal loan. And typically those are much quicker to obtain. Buying a home with cash is a really great way to diversify your investments. Oftentimes people feel like they're making a certain return that they count on through the stock market or their other investments. But the one thing we know about real estate, especially in the DC area, is that it's very stable and consistent. The real estate market is not tied to the stock market in any way. They can occasionally reflect each other, going up at the same time or down at the same time, but they really don't affect each other in any way. So when you diversify your funds like this and the stock market goes down, you can feel confident that your real estate will continue to appreciate, or at least stabilize for a time before it starts to rise once again. One thing that can keep people from paying cash for a home is limited liquidability. So it does take some time to get the money out of the home, either by refinancing or by selling it. For example, right now, it's taking about 9 days to get a home under contract in the DC area market, with the average contract taking about 30 days to close. That's 40 days. So you'll have to give yourself at least about 2 months to get money out of your home if you're selling it. When you pay cash, you don't carry a mortgage. So you will be saving tons and tons of money over the lifetime of the loan, hundreds of thousands of dollars. So how is paying with cash different? Well, there are less origination costs because you won't be paying the lender's fees and you won't have to pay for an appraisal, but we'll get back to that later on. Number two, your offer is more appealing to sellers. So you'll have a waived financing contingency and you can close quicker. You can also always cash out refi down the road. So if you want to, say, for example, now with the higher interest rates, pay for your house with cash, but then get some of it out of it, you can always refinance and you go through the same process you would if you were refinancing a home that already had a mortgage. However, you'll take the cash out and then you'd be incurring a mortgage at that point. So if the rates ever go back down to the 2.5% crazy record low rates that we had not so long ago, it could be a great time for you to do that. Now that we've discussed whether you should pay for a house in DC with cash and some of the differences, we can talk about tips that will help you get the most out of your cash offer. Typically, if you're making a cash offer, it's smart to offer a higher EMD. This shows that you're serious. When you are buying with cash, you don't have a lender sort of working in the background, making clear just how serious you are about buying this home. So it helps the seller to understand how serious you are if you do make a larger earnest money deposit. Some of my clients in the past have done something like $120,000 on a $1.2 million home or $50,000 on an $800,000 home. Just a nice chunk of money that they know you would be unhappy losing if you didn't make it to closing. Now, speaking of making sure the sellers feel comfortable, this often surprises people that are buying with cash, but the sellers will need to see a proof of funds prior to accepting the contract. If you are going to a bank for a loan, they would have a pre-approval letter for you stating officially that you did qualify on the bank's letterhead and all that to assure the sellers that you would be able to make it to closing, that you would be able to get the money together before closing. In this case, you don't have a bank, so you have to show them how you're going to pay for it. So this can be something like a statement from a bank, a document showing your stock options, something like that. And if you have slightly less than the purchase price, so let's just go with that 1.2, and you only have $1,050,000, your agent should be able to explain that to the sellers for you. So maybe you're going to have 2 paychecks by then, or you have money coming from another bank account, but you can't show that one, or, you know, there's some way that you actually are going to pay, and we could explain that and make sure that they're happy with the explanation. Another difference is the amount of time it will take to close. Without the bank doing all of their processes, you can typically close much quicker. The only thing that happens from contract to closing in a cash sale is the title work which will take about a week, and you transferring your money around. So typically, a cash sale can close in 7 to 14 days. If you did want to take out a personal loan for a portion of the payment, you just have to make sure that your lender would be able to close that loan that quickly as well. Another tip, depending on what you feel the value of the property is and how much your realtor has been able to help with this, you may or may not decide to include an appraisal. So the appraisal is normally there for the bank. So the bank knows that it is only loaning out an amount of money that is less than the appraised value of the home. So in your case, without the bank involved, you can choose to waive the appraisal, which is perfectly fine. Like if you feel like you're getting a great deal, your realtor did the comps and everything was very consistent and you're happy with paying this price in cash for this home, you can waive the appraisal and move on. Or you could include the appraisal contingency, which would still give you the same right to renegotiate should the appraisal come in lower than the contract price. In any case, whether you're buying with a loan or with cash, you're paying for the appraisal. But if you're paying cash, you can certainly hire your own licensed appraiser and have them determine the value for you. And then if it comes in lower, you can renegotiate, or if they won't agree, you can back out of the contract at that point. Another advantage is the sellers really do like cash offers. They're quicker to close and they have fewer contingencies. So that really gives you more negotiation power. Thank you so much for watching. I hope this all helps you make a decision. And please do like and subscribe. I've got tons more planned for you.